Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Okay, guys, sorry, I am like super late. Let's just go straight over here. We've got retail sales coming out here in just a few seconds. Also, New York Fed manufacturing number, let's not forget about that too. But the core retail sales number we're looking for is 0.9%. And I am anticipating that it will be higher than expected. So we'll see. See if rates get like a huge spike here. Yep. Okay, so 3% versus 2% on the headline number and 2.3 versus point. Holy Nikes. Yeah, I'll take that. So we can kind of use yesterday's numbers as kind of a guide. And yesterday we were like above 3.8 at one point, weren't we? So the micros aren't reacting correctly here because nobody's trading it. But did you see when I hit that? I was the first. Well, it's told me that I got 3775. Did you see all of that volume that came in after me? Holy crap. That easy. I had a position on yesterday and it came all the way back. And I wanted to hold it, but I just couldn't handle the stress, man. And it looks like I would have been right where I had been gotten in at anyways. So I'm okay with taking it here like this. Okay, so the move here was, I would say, a little bit muted compared to the CPI yesterday. But that number does not look good at all. 2.3 versus 0.9. That was way higher than even I was expecting. Also, New York Fed manufacturing at negative 5.8 versus a negative 18. So these are really bad numbers. Well, I mean, these are really good numbers. If I had been in a little bit more profit, I would consider putting on a second contract right there. Now I'm super fucking nervous. Okay. Let's go. Come on. Do I have to do everything? I'll take you out too if I want. Oh, there we go. Okay, somebody did it. Not if I want, if I have to. Keep at it. Come on. I'm trying to keep myself calm here, but I'm super hype right now too. Looks like they're going to take their time on this. Why am I so? Because I put 2 contracts on. I wasn't planning on doing that, but I saw the offer sitting there just begging to be hit. See, that's you know, it was a good take too. But yeah, it's so little money, but it stresses me out, man. Because I'm more concerned about the performance of it, right? I mean, the amount of money, that doesn't matter. What matters is, you know, the overall numbers, and if you scaled it up, would it be okay? Are you really trading the ZB with $1,000 account? Oops, I spilled on myself there. I really don't think I could do ZN, full ZN without maybe 5 to 10K. So I was thinking about taking sequential profits at $20 there, but I guess there was some contracts that went off at 3.787, but it was a little tight, and I never got the prices that I want to go bid, so I didn't hit it. But what's nerve-wracking about it is I don't normally add 2 contracts. So, like, if this doesn't work, it's really going to hurt the performance, right? And to be honest, this is not playing out the way that I wanted it to. Which is to say, I wanted to only have the 2 contracts on very briefly, and now I'm holding them through the whole pullback. That's not optimal. Are they $1,000 now? I thought they were still 500. Well, it probably should be 1,000, right? I mean, that's the whole thing, is that when I was trading ZN with 1 contract, I can remember multiple times. Oh man, which is so weird. I can remember that I lost $500 in a day. I can't remember the circumstances or how it happened and all that. I found that when you have really bad losses, that your brain really wants to forget them. It's the most bizarre thing to me, but your brain seriously will, like, that things that were negative or traumatizing, it kind of forgets. But yeah, I lost $500 in a day many times, and the way that I try and look at it is like that $500 should only be like 1%, right? So I want to be trading at least $5,000, right? You lost 700 in a minute once. I'm not sure what my biggest loss in like one trade 1 minute was. I think I may have had a trade where I lost $500 all at once like that. But the ones that happened, the ones that bothered me were the ones where it was like death by 1,000 cuts. Like I traded like way over traded and had like 10 to 20 trades and it ended up being a $500 loss, and it was like, how could my hit rate be that bad, right? Those were the ones that really still kind of haunt me and are a big part behind why I'm as risk adverse as I am, right? Like the tack that I'm trying to do is like be risk adverse most of the time, because most of the time the edge that you have is really minuscule, and then that one situation where you really have a strong edge, you've got to swing for the trees, right? So I think that between that CPI data that we had yesterday and these retail sales numbers that we're getting, that we have a good opportunity here. It's not selling as hard as I would like. In fact, I'm seeing a little bit of some mean reversion and actually buying in the treasuries. So I'm gonna feel nervous, right? The thing is just, okay, how do we avoid the nervousness from affecting your decision making? So, and I think the thing that I will do when I get nervous is I will just hang on and pray, right? Which is kind of what I'm doing right now, which makes me more nervous. That 30-year looks awfully heavy to me, don't you think? It looks like we're getting some steepening here. So it's a little bit of fight there. So let's take a look here. So part of it here, I think, is the dollar. The dollar looks like it could be headed higher, but at the moment it's still range bound. The Japanese yen took a real crater. Japanese yen went down. So the Japanese yen seems to be responding the way that we would expect, a little bit better today than it was yesterday. I still kind of see things that are pretty like everything's kind of moving together. I was always operate on the assumption that's what stop losses were for. Yeah, but you can only hit your daily stop loss so many times, right? Before it ruins your account. I've had some good performance. I don't want to ruin it. Well, that's not looking so hot. Okay, so for as strong of a swing up that we just got there, that the damage was not too bad because the ZB is staying down there. Retail sales jumped 3% in January, smashing expectations despite inflation increase. I mean, that's a really hawkish headline, man. I mean, that's the hawkish thing I can think of happening right now. Is consumer demand still being really high despite all of the problems, right? So what I'm seeing now is the like, okay, well, if you were going to take multiple contracts, it would have been better to have just waited and done it here, right? I still believe in the trade. The flows in the treasury are not, at the moment, not in line with the trade at all. Is that, yeah, the dollar coming back there. Okay, so we're still seem to be really attached to the dollar. And the Japanese yen came back there too. You're surprised I don't scale it? Well, I'm always kind of like on the precipice of scaling it, and then I'll kind of have a setback and I'll push it off. I think what I'm doing today is not scaling. I'm revenge trading is what I think I'm doing now. Fuck. I don't know. I mean, there's some strong flows coming in there to the long side, and I'm just sitting here thinking 3.75, yes, please. Because I think long term, this is headed to 4. You know? Okay, well, flows maybe shifting a little bit here. Hey, Pep, welcome back. You've been here every week. Super proud of you. Not every week, every day this week. Okay, Liz Ann Saunders says a 7.2% gain in restaurant retail sales in January was the strongest since March of 2021 before the pandemic. We've never seen that kind of strength. I'd say so far the behavior they were seeing is like within the usual margin of error. Axelrod, I've been here for 2 weeks every day. You've been here longer than 2 weeks, haven't you? You're a little quieter, though. I don't know. Those people that come in and they ask a lot of questions at the start, I tend to remember them a little better. Sometimes I wonder... should I start keeping a spreadsheet with notes about my viewers and stuff to remember them better so that I can, you know, better serve them? But whenever I have that thought, I go like, no, that's creepy. Don't do that. Yes, because you're trade. Yes, true. I can always tell when everybody's in a trade because chat gets quiet. What are your notes about me? Oh man, Kevin has been around for so long. It's funny, I get put on the spot and it's hard to remember. Now is probably not the best time to try and get me to remember things. Oh, you've been here since the pandemic. You just changed the username. Oh, okay, that's cool. No, Kevin has been here since like 2017, 2018. Man, he's been around for a long time. Him and Lucas are kind of my my two guys that like they're not as active, you know, like consistently every day like say Uzi are, but they've been around just as long. Yeah. And my recollection is that Kevin likes to trade oil and he's from Germany. Okay, so we had like a bit of a stop run at the opening prices there. They pulled back and they're coming back to those prices again, and I still am not seeing significant amounts of selling in the treasury. I kind of feel like that the treasury needs to decouple from the dollar a little bit here, man. I'm 50-50 on whether or not ZN is going to keep running up. I feel that if ZN runs up here, that it's very much in contrary to the data that we just got. Oh, you ditched oil? That's sad. It always happens, though, especially if it's this kind of a more technical trade, which the one he was doing was. Although that one, because it sounded like you had a pretty good theory behind why the behavior happened, it's pretty likely that it'll come back eventually, right? Because he was playing like the close. JP Morgan's title, "When You Wish Upon Our Star." Okay, so what do you guys think is going on here? Were they just overly over-positioned? How do you get above 3.5? I'm super frustrated right now, guys. So when I start to get this feeling like, it's like you feel like the world shouldn't be this way and it's not fair, and what's going on and why is it I can't change anything about it now, and all this sort of a thing. That's like when I will start to go into tilts. So what should I do here? Just sweat it out. Let's go to Zero Hedge and read their synopsis of retail sales, okay? After 2 straight monthly declines, consensus was for a big rebound in retail sales in January, with the most omnipotent of forecasters at Bank of America seeing an even bigger surge. And once again, Bank of America nailed it, as headline retail sales soared 3% month over month in January. That's the biggest jump since March of 2021, lifting the year-over-year rise in retail sales up to 6.4%. Core retail sales growth also be on a month-over-month basis, but the year-over-year slipped to just 4.4%, lowest since March of 2022. The control group, which filters directly into GDP, saw a 1.7% surge, far better than the 1% expected. Under the hood, all 13 retail categories rose last month, led by motor vehicles, furniture, and restaurants. The report showed vehicle sales climbed 5.9% in January. Department sales soared 17.5%. So what's really behind the red hot retail sales? Well, aggressive seasonal adjustments, same as the payrolls, and one-time COLA adjustment, which was 8.17 points one-time post-holiday spending spree to take advantage of liquidation sales, which is also one-time. Those are all one-time factors, so do not extrapolate. Finally, as a reminder, all of this retail sales data is nominal, i.e. not adjusted for inflation. While not comparing apples to apples, adjusting nominal retail sales for CPI shows that America's real spending has gone practically nowhere for 10 straight months. So before you charge off writing about how strong the spending data is, consider how strong the credit card debt load is and how weak the savings rate for Americans struggling after the 32nd straight month of real income decline. So hotter than expected payrolls, hotter than expected inflation, and now hotter than expected retail sales. Get back to work. Mr. Powell is their synopsis on Zero Hedge. So it could be a squeeze. That's what we're seeing here. Could be a squeeze based off of, oh yes, the number was hotter than expected, but it's deceptive. I don't know. Half is correct. Market got super liquid oil. Was super news heavy at the beginning and VWAP. Well, I tell you, remember when I got slaughtered by that oil trade, man? That was brutal. That was brutal. So, it seems to me like they're trying to continue up with the dollar kind of pushing there, but it's kind of struggling. The volume, like cumulative delta overall, volume imbalance, let's call it, is kind of flat, if not maybe turning around. I need to zoom my dollar out here. There you go. See, the dollar is maybe kind of basing here. And the one that I'm most surprised about is the treasury shares, because when I look at the stock market, I can kind of say, well, you know, retail sales were good, but they weren't like so good that it's a complete abject disaster. Then the S&P 500 can be okay with that. But I don't think that the treasuries can. I don't see how the treasuries can hold 3.75. 3.75 is too low of an interest rate given the circumstances, I think. Like, I'm thinking the risk is am I crazy? I'm thinking the risk is you get two more interest rates, they hold it, and by the time you get to those two interest rates, the data will continue to be good here, and then they're going to say that they have to raise it even more. But that would be a risk, not a default case. I think, oh gosh, come on. A large trader is fucking with them there is what that was. So you see there was the big stack, a little bit of buying came in there, and then he pulled in, it came back down. So they're trying to squeeze us. Even though the dollar came back a little bit there, the treasuries didn't quite follow in line with it. But you're going to need to see them sell through that 10. Well, it's pulling. Come on. It's throttling even on the long side. See, normally that would be a kind of a bullish signal, but in this context, it's really suspicious, right? Like if it's such a good long trade, they wouldn't need to do that. Would have already gone. Yeah, and look, they take 10 and it was only 1,000 contracts. I probably need to relax now. So, that throttling, I haven't used that term in a long time, and I've never talked about this in the videos because that's a behavior that I haven't seen for like years. So what am I talking about? Throttling, when I say throttling, think of like when you're in a car and you're like throttle, you know, you're parked, but you're like throttling the gas to make the engine rev, right? You know, that's what they were doing is they were like stacking and then pulling it off, stacking and then pulling it off and scaring all of the offers. but then the volume didn't really come. Well, maybe the volume came through. Maybe it was somebody spoofing and they got their fill, but it was like it didn't come through. And then the places where they were doing the stacks, there was no unusual amount of absorption or anything like that, right? So in the context when that happened, I was really suspicious, because why would you throttle if you're at the highs and this is a really good long trade, right? You only do that if you're worried that it's going to stop here, right? And look at the dollar. Okay. The dollar is back to where it was. And when the dollar was here, the treasuries were at points at their lows, right? So a little bit of a divergence between the treasuries and the dollar there. So that might have been somebody coming in and identifying that as a good short opportunity in the treasury. And by the way, the volume imbalance in the 10-year really came in there. So that was the at least the start of the volume that I've been expecting this whole time. So that was very supportive of my trade. But big but, after all of that and that volume came in, it only got me back to break even. So I'm still a little bit nervous about that, in that I may have gotten a poor position. All right, like the location that I got it within the range and everything may just be may be bad enough that it will be difficult for me to work this out, because I might not get the volume that pushes it all the way to new lows, right? And if we don't get that, I don't want it to be a scratch. What are some good sites for more detailed news? I only get Agenda, but that's not really detailed. Yeah, so first of all, I highly recommend a News Squawk. I am a Financial Juice affiliate, have a link in the video description. That's what I use for my News Squawk. And I think the ability to be able to sit here and hear news headlines come across in your ear and react to it immediately is really important. Okay. Another important thing is to have morning synopsises of like what happened overnight. So the best free resource I've found for that is from newssquawk.com/blog, and they do like a morning rundown. It's not as nice as the one that they do for subscribers, but it gets the job done. And then for really detailed analysis, really what you want to be reading is the street reports from the street analysts, like the guys at JP Morgan, at Goldman Sachs, and Nomura. Nomura is really good, especially for interest rates. So those you aren't really public, and what happens is Zero Hedge regularly leaks them. Zero Hedge is the only place I know of that does this, so Zero Hedge is an essential resource on that one. This is all stuff that I am planning on covering in my next video, actually. I mean, I've covered it in videos in the past, but I had a bunch of that in my new video, and so that's how I was able to roll that all off the tongue so quickly, because I had written it the other day. I took my script and I put it into ChatGPT, and I'm like, modify this YouTube script to be more engaging, and I really hated how it changed the script. Because I had this whole thing about like basketball. I was like, look, what a lot of retail traders are trying to do. It's like they're all focused on their psychology. Like, your psychology is bad. Your childhood trauma is causing you to self-sabotage because you don't think you're deserving of success, and that's why you're doing what you're doing. No, it's not. You suck at trading. That's usually what it is. I mean, the game is kind of stacked against us, but you suck at trading. So it's kind of like saying, the reason I lost to Michael Jordan in one-on-one was my psychology. When you can't even dribble. Like, if you can't even dribble, like, you're not even playing the game at that point, right? You're just getting a front row seat to a jam competition, is what that is. Slam dunk competition, right? You have to actually have like certain skills, and there are certain things in the markets that if you don't understand, you're going to have a really hard time, right? Just like as hard of a time as you would if you don't know how to dribble in basketball. And unfortunately, what happens in retail trading is there's a lot of retail traders out there telling people not to pay attention to those things and to not build their skills up on those things. And what are those things? Reading the news, watching correlations, watching the order flow, right? Everybody talks about risk management and psychology. Well, those are important parts too. Everybody talks about. Everybody knows that risk management is key, right? You have to think about your risk management over a long time frame, but that's why when we were talking about Uzi earlier, like trading ZB with $1,000 account, you can do it. And it's certainly seen people have success and like built an account up like that before. But what I would be thinking about is like, you're going to have bad days, right? And in ZB for me, well, in ZN for me, a bad day is $500, right? So basically trial by fire, yeah. I think I've had $1,000 day in ZB. I've had multi-$1,000 days in ZB on Sim. So what happens is you have that bad day and you say that's a fluke and that can just never happen again, sort of a thing. But what you need to be thinking is that's going to happen. In fact, that might happen to you once a month. So how many times in a row can that happen to you and still trade? That's the question that you should really be asking yourself on risk management, right? I digress. It really frustrates me that, like, can you imagine if somebody came in and they say, here, I'm going to help you learn how to play basketball. All you got to do is shoot 3-pointers. So just focus on practicing 3-point shots. All practice. That's it. Dribbling doesn't matter. Dribbling is, you don't need it. That's what they're telling you when they say just trade technical analysis. Just ignore the news. That's what they're telling you. So my challenge is make a video, super engaging, teaches people this, so that we've got more retail traders that understand how to incorporate news into their trading, so they actually stand a chance, you know? Okay, I have a question about liquidity holes during these news events. Are the banks market makers making liquidity holes with these low liquidity news spikes? So kind of. So, when you have a big news event, because all of the orders pull, and again, think about it in terms of latent liquidity. So like there's a resting liquidity, and you'll see resting liquidity be lower, which is like a big red flag about how much volatility you're going to get, right? But there's also the latent liquidity, which is, you know, it's going to trade there multiple times, and how many times can it trade there before there's just not buyers there anymore, right? So even after the liquidity comes back, you're going to have low latent liquidity, okay? But there's a little bit of a difference between that action after the news and like the liquidity holes that we talk about, right? Because in that situation, it's just going to be low resting liquidity overall, which just means that whatever the market orders do, they're going to be more influential than normal about where price goes, okay? When we're talking about the liquidity holes, we're talking about areas where the latent liquidity in an area is less compared to the latent liquidity immediately above and below that area. And that's what keeps it stuck in that range, right? So when you get these liquidity pockets after news, and for instance, you kind of have to treat them a little bit differently, because what happens in those ones is market orders are going to move the market really quickly, and those market orders can get off sides really quickly. Like they can get ahead of themselves, and then you get this really aggressive pullback, right? So it's kind of a different sort of a thing, and what you get in those situations is, you know, really fast aggressive pullbacks that kind of don't make much sense sometimes, right? This one, the one that we had here today, is a little bizarre, to be honest with you. I think that this one, in order to explain this one, we probably have to go more into positioning and so forth. Like, Bank of America has been projecting these retail sales very effectively now for several months. So when they came out and said that the number was going to be well above the consensus expectation, I think it was probably the case that the street was really expecting Bank of America's numbers to win out, right? So they were probably already positioned. And so maybe the action that we've seen here today was profit taking on them saying, okay, we got the trade, we won, now let's take our profits. That's the only way I think I can just explain that, you know, about 20,000 contracts long in ZN after all of that. How do the microstructure researchers explain these intraday spikes? Are they similar to larger scale liquidity crisis at the real economy? Well, so the key thing that you got to realize there is that orders have strong impact, right? So remember the square root law. 1% of the volume can be responsible for 10% of the volatility. So the whole thing is that the market is kind of prone to spikes, you know, like spikes of volatility that come from nothing other than the market itself, right? So one of the what is the market outlook for the day? You know what, Lucas? I don't know. I've been sitting here with the trade thinking that interest rates are going to be going higher here, and it hasn't been working out. And the flow, I did get the flow that I was expecting. It's kind of reversing a little bit. We're still being very much dominated by the dollar. We're still being very much dominated by action in the dollar. So I'm saying, like, my call would be higher interest rates today, but I'm starting to not feel very confident about it. We have an overall bearish market across the board. Yes and no. One of the things that I will say is that we've had a lot of really big data releases that I would have thought would have really cratered the market, and the S&P 500 in particular has held it really well. Like, when we look at ES, I mean, like, look at where we're at in ES. It's just kind of like in the middle of a range. It hasn't turned into like this dramatic sell-off or anything like that, right? So it seems to me like there are some pretty strong passive flows in equities in particular coming into the markets, which I find very concerning, because that says to me that the probability, I don't get ES at all. Yeah, it is a little bit nonsensical. To me, it suggests that the probability that inflation comes roaring back is really high. That's what I keep seeing, and all these numbers, just everything I've seen since the beginning of the year says that inflation is not defeated. And I'm not convinced that just getting interest rates to 5.5 and then holding it there for a year will be enough. I'm starting to think that we've gone back into a kind of a market regime where like 5% is just like the normal interest rates. You know what I mean? But we'll see what it does. If we get more selling, or what the dollar decides to do. It looks like our fate is kind of going to be determined by the dollar, which really sucks, but you changed your view then because you were saying the rates below inflation could be enough. Yeah, well, so it seems to me that just the act of raising interest rates itself has a tightening effect on things, right? But I think that
what I'm seeing here is not necessarily a change in my view, which is to say, it's not that I believe that interest rates need to be at 7% or whatever it is in order to defeat inflation. All I'm saying is that the financial conditions tightening that we've had wasn't enough. It has a really dramatic impact on prices, but it's not actually impacting the labor market and some of these other markets in the way that it should. So that's where I think that we really have to consider that the macroeconomic environment post-COVID has changed dramatically, and maybe it always was going to change and COVID just kind of brought it further, but that we may be in an era where inflation is a more persistent problem. You know, because what I keep seeing in the bond markets in particular, and this has kind of been the case from the very beginning of this whole COVID, story arc, right? Is that the market seems to think that eventually the Federal Reserve will cause a recession, and then interest rates will go back to rock bottom, and they may well create a recession. But I'm just saying, a lot of boomers are retiring, man. So there's going to be a lot of wage pressure. Okay, so why is the 10-year able to move around so much? Okay, so we did get industrial production and stuff like that. That's usually not a huge data point, so I kind of ignored it. It looks like we did move a little bit. So U.S. industrial production month over month 0 versus an expected spot 5. But manufacturing output was 1% versus an expected 0.8. So that's interesting. Octavia says I think that the S&P 500 should be below 4,000. Or let me say it this way. I think that if you were able to create a price that factored in all available information, that it should have the S&P 500 below 4,000. But what's going on is there are certain liquidity demands and money being put to work in the market that are pushing the price away from what the fundamental story is. I don't think there's any other explanation for it. It's a little bit of stacking there at 06, kind of. So when you see a stack like that, it's often because a robot thinks that it pivoted. Well, 282 contracts to take 06 out. That's, yeah. When we were at the highs, we saw a lot of really suspicious behavior, right? Since that time, of course, we've had a little bit of a bump and not come back, but I would say that the action has been really quiet since then. I'd agree with inflation being a more persistent problem. And oh, yes. So here's another thing, is that China's putting a lot of money in, right? So you remember there was this whole thing about the U.S. economy. There was too much monetary and fiscal stimulus, and the United States basically ended up exporting inflation all around the world, and that created all sorts of chaos in some of these small emerging markets, right? Well, that same phenomenon can happen with China, and when China does it, we in the United States kind of see the knockoff effects of it. So yeah, I'm a little bit concerned about, China printing all this money and those investors coming over to the United States and using it to buy houses and all of these sorts of things and inflating prices over here and creating more problems. And then that just kind of means that the Federal Reserve has to be more hawkish, right? It's like this vicious cycle. Yeah. It's a really good example of how, what happens out of the market just gets fed back into
that information gets fed back into everybody else, and they use that to make decisions, and then it just kind of becomes this fractal function, circular function. So I see a couple of reasons to be concerned about inflation in the long term, right? Which is why I keep looking out for the yield curve to steepen. Now, yesterday it did not steepen. Today, I am seeing some steepening. It flattened at first, but it's steepening out. And by the way, ZB looks super heavy, right? So I think that in order for our trade to work out, the dollar is really going to have to go and push to new highs and get above 103.8. That seems to be the thing that's holding us back. But the ZB is kind of helping. Well, that didn't help. I'm kind of starting to worry that like I have things right in the long run, but that the market is gonna bite me on it until I'm done trading for the day, you know? But I've been seeing a lot of that. Well, there was a good 2-tick sweep there. It seems that when I see the dollar kind of like shift, that I'll see stronger reactions in the treasuries. So maybe the banks saw a big transaction there in the dollar or something, because it kind of, yeah. Because it was like I saw the dollar like tick up, but it was like, it wasn't like outside of the range or anything like that. But then all of a sudden the treasury market was like, oh, giddy up. Sometimes I wonder though, you know, one of the problems that we have is that, you know, the investing themes and the things that you think will happen are tend to be things that you think would be good for you, right? You know, what would be good for me? What would be good for me is if inflation continues to be a persistent problem and wages are able to keep up with inflation roughly, or that my wages are able to keep up with inflation roughly, right? So the less of my income that my house payment is, the better for me. And almost all of that money that I would get extra from that, I would probably put into my retirement accounts, you know? I really want to build those, you know, I really want to build those up and have some more money to play with doing investing, you know? Long-term investing. So maybe I deep down, I really want to see the inflation. I don't know. I continue to find more and more. Okay, so that was a pretty aggressive take at 05 half. I find more and more that we as people, and it's not just me, I mean, maybe I'm less aware than the average person, but like I can be in a situation where like mentally I think that everything is fine and I'm perfectly calm and I'm just being, you know, maybe I'm just quiet, but emotionally I am nervous. And like when I look at my body in my hands and things like that, like my physiology is showing all of the signs of nervousness, you know, but out here I don't think that I'm nervous, right? Like we are just not as aware of what we are as we think we are. And yeah, you can have like thoughts and motivations and things that controlling your behavior that you're completely unaware of. Like this is what, you know, like revenge trading, it totally happens. This is why I keep saying, like, guys, the thing that'll kill you is the ego. That they're coming in and thinking that you know, I have to present a certain face in order to look good for other people for ego's sake. That'll kill you. That's why I'm not afraid to come in and tell you, like, I feel nervous right now, you know? I see your layout. I'm trying to understand everything. You have bonds and yields on your DOM with the dollar and ES. Can you explain the relationship between these instruments trading? Yes. Okay, so ES is the one on the far left, right? And then I have the 30, the 10, and the 5. Okay, and I have them positioned in that order because of spreads. So if you come over here to my charts, you look at like this very bottom data series on this knob chart right here, like the bottom chart on this screen right here. Okay, up means steepening, down means flattening. Okay, so I have my DOMs positioned so that that same relationship is there. If they're up like this, it's steepening. If it's down like this, it's flattening. I should recenter. Okay. Now I have the yields here as well. So the yields are going to move opposite to the outright prices. Okay. But I mostly have those up there just because I'm really interested in the micro treasuries and I want to see that market continue to grow. And so I'm even though I only put trades in this micro 10-year, you know, I'm keeping track of what's going on in these markets overall. By the way, no trades in the 5-year, but they are market making in the 5-year today, which is different from what it's past couple of days. It was like they weren't even putting the liquidity up. Right now, there are correlations between the treasuries and the S&P 500. Usually that correlation is a negative correlation, which means that when the equities markets go down, the treasuries move up and vice versa. But at the moment, that doesn't seem to be what's happening. At the moment, what we're having is the dollar moves and then everything else shifts with it, right? So what did we get? We got that move that we wanted, right? The dollar did move higher. They're getting up to 103.9. Okay. We haven't gotten more favorable excursion than we had before, but we are at the point at where I was like, oh, maybe I should have taken a contract off. The reason why I wanted to take a contract off kind of doesn't apply anymore. Okay, but it's just no, the dollar went higher. The treasuries have not reached new lows yet. 6J is at their lows. The 30-year is at its lows. It's just the 5-year is not. So maybe what's happening is that the flows have been like flattening for so long that then maybe they're not, maybe some of these are not catching very well that the 5-year is up a lot because it's a steepener. Like, look, if I kind of like try and rearrange these so that the lows are at the same prices, you can see how much higher the 5-year was. 5-year pulled back from its lows than the other instruments did, right? So we're getting some like strong steepening. Which yesterday, by the way, so can I see it over here? Yes, because yesterday I was like, well, shouldn't this cause steepening? And it didn't. It was a flattener. And so I was like, well, maybe this is a good time to buy the steepener. Well, even though we're seeing steepening, that steepening is a retracement of the flattening that we had. So if that was a good trade, it has yet to have played out. But that's something I'm keeping a close eye on. So hopefully that was a thorough enough explanation of what you're seeing on my workspace. And by the way, I do have a video that is just about like my workspace and why I have it set up the way that I do, and like all of the individual settings on the DOM and stuff like that. So if you want to do that, go find that on the channel. I think I did that in November. Well, we had a pretty good move down there again because of the dollar. But again, it feels like, you know, you get that move and then things are pretty quiet. Cumulative delta is kind of even. So do we think that the dollar can go even higher? Can the dollar make it to 104? Where's my chart? Sure, it could. There was this point earlier back on January 5th where the dollar went really high and then like reversed really hard and started kind of that more recent downtrend at 104.6. When you look at this chart here, I'll show you. Okay, so big disclaimer, past price movement does not predict future price movement very well. Technical analysis does not work very well, but you will see the patterns and people talking about it, and this is going to kind of look like a cup and handle sort of a thing. Like that it was coming down and then it rocketed back up right here. A lot of technical analysts are going to be looking for the dollar to continue higher. I know, like you've gotten some good downticks, but then it just kind of we may form. So I'm not getting strong indications in the liquidity here yet, but given that it's just kind of sitting here, you run the risk of creating a liquidity hole at 04.5. Okay, well here's the S&P 500. We'll see what they do on the open. Well, it's not super crazy, but I would say a little bit more volume here on the open than normal. Treasury has moved down 2 ticks there off of that. I was keeping an eye on the S&P 500 there, and then I was realizing why I don't like watching the S&P 500 DOM so hard. It looks like it's to the downside, but it's really tight. What was that? An offer at 05 pulled there. A bunch of volume went off. It was about equal to the amount that pulled though, so iceberging. I don't know if that tick was significant or not. Also, we have seen a little bit more volume trade here in the micro treasuries. Okay. Started to kind of get up there. Somebody smacked it back down. 06 goes bid again though. Dollar is reverting back here to 103.76. So it may be once again dollar correlation. I'm getting really sick of this dollar correlation thing. Like, whatever happened to the interest rates moving based off of what they thought the interest rate was going to be? What's with that? Why is it being so strongly correlated with the dollar? Or was it always strongly correlated with the dollar like that and I didn't realize it, and the interest rates just don't think that the data that we got is as hawkish as I think it is? Still steepening though. Like even since I reset it over here, like look, the 5-year is up like 5 ticks. That kind of means, though, that if the treasuries do take another little leg lower, the 30-year is going to break lows and it could be ugly. And the 30-year could really drag them down. That's the way it tends to go, is like when you get a spread like that, is like if one of them breaks the higher the low, it kind of drags them with it. Well, I've been in this for an hour now, and it's basically a break even. Hard to feel at the moment that the market is not just messing with me. They're like, well, we know that interest rates should be higher, but because Seth is long rates and we don't want him to make money, we're just gonna play with it all day instead. S&P 500 turning to the long side there now. The dollar's still kind of heading down as well. Well, the 5-year just kind of touched the spot where it might kind of back off. Let's reset it here. Let's see how this turns. Okay, that was a strong uptick. Didn't hold. Dollar starting to give us tails now. Spoo's still being random. Oh man, the S&P 500, that drives me crazy, man. Twos are leading higher. Well, yeah, like I said, it's steepening, right? So like the way that I think about this kind of setup is like it's steepening. I expect that the steepening will continue. So the question is it steepening with treasury prices moving up or steepening with treasury prices moving down? And that may depend on which side breaks first. You know, the ZB is still kind of like if you were a price action technical analyst kind of guy, only watching the 30-year, you would be like, oh yeah, 30 years going to go lower, right? That's not very predictive, but you can just, the point is just that the ZB is kind of hanging out down there still. I don't know. You can approach it that way, but in the end, it's probably like it probably doesn't matter because it seems like they're all just doing what the dollar. The market makers price in their risk neutrality and pairing orders. How do they calculate that? Yeah, so there are some models that can go into that are in that book where they kind of talk about in terms of like pricing risk. So like what the market maker is trying to price in is there enough of a volume imbalance in one direction or the other to suggest the presence of an informed trader, right? And then I need to adjust my bid or my offer based on that on that possibility. So they what they kind of have to do is they kind of have to say like, okay, if I was going to move the market yay much, how many contracts would I need to do it with, right? And based off of that, they can kind of figure out a number at which it's like this can't be just like randomness. Like there's a real imbalance here, right? So we don't necessarily have to calculate that because we can just watch what the bids and offers do. Okay, I've seen strong ticks across 07.5, both bids and asks, several times now. So I don't know. Does that just mean that the market makers are really willing to market make here in this situation? I guess so. Because it's so far it hasn't been too trendy of a day, has it? I mean, there has been a little bit more excursion on the sell side, but didn't really play through. Oh, our camera died. And just turn that off for a little bit, let it cool off. Should get my fan today, so hopefully that'll fix that problem. If not, we're just gonna have to go back to 1080p and forget about the recording part. Okay. Well, yeah, there it is again. One thing we do have to, I would expect it to continue steepening, but that could shift around and revert, right? How would an informed trader create an imbalance? Well, so they're going to keep buying and buying and buying, right? And how can I explain this? I guess the way that I would approach it is like when you look at cumulative delta and you see cumulative delta consistently moving in one direction, right? That suggests that there's a persistent imbalance in the market orders, right? And one that is strongly indicative of a large meta order executing, right? So that there's this big guy, he needs to execute a bunch of sells or whatever it is, and he's going to do it persistently over time, and that's going to lead to more sells than buys overall. You get the trend, yeah. So the market maker is kind of looking out there to see, okay, like how likely is there a meta order out there or something like that, right? And then there's a certain level at which the imbalance is coming in there that they say, oh, I probably shouldn't take contracts here, and that's when you start to see it tick on very low, not very much absorption. It just speeds through an area. Right. So that's why we're kind of watching all of these things and the correlations at the same time, right? Because if it speeds through an area, was that because there was enough of an imbalance in my instrument that the market makers reacted to it? Or were the market makers reacting to the correlation, right? Well, you can kind of sort that out, but to do that, you have to be watching them, right? Most people don't watch them. Some absorption at 07. They didn't breach it. And they took 08. Oh, geez. Wow, did you see that? So the dollar was looking good, like it was going to head back up again, and it got smacked down super fast. I think that some of my calibrations are a little bit off because I added 2 contracts on here, because I'm kind of realizing that since the news, the range has only been 1 basis point on each side of it. Like, it seems to me like it's moving, but now I'm realizing that like the actual change in interest rates hasn't been very much. And furthermore, we did see selling. see selling, but it was just a retracement of the buying that we had. Is the 5-year gonna breach highs before the 30-year breaches lows? Man. Either way, I have to say that today did not play out the way that I thought it would. Okay, a lot trading here now at 10 and 9.5. $3,000. Decent bid. Gonna have to watch this area now, I guess. Whoa, the dollar just did like a crazy head fake. But the treasuries are still buying it. What the hell is with that? Nah, I'm seeing the orders turn to the upside in the 10-year. Well, I'm seeing all sorts of activity here now, but it kind of looks like the 5-year is ready to bust, but the market is kind of fighting it a little bit. That was a new high in the ZF, wasn't it? Yeah, it was. Yeah. Fuck. Hate it when this happens to me. Can't justify being in the trade anymore. Well, I've been dead wrong big time 2 days in a row. I think I just have to chalk this up to revisions makes the picture not as clear as I think it is. I think that's the only way I can explain it. I'm mad that I was 40 instead of 30, but you know, given the increased size and everything, I'm lucky that it turned out the way it did. But what really throws me off about that is that this whole time it's been like the dollar has been the thing, it's been moving off of the dollar, and then we finally get the dollar to go our way and then it doesn't matter.
So I hate it when the correlations just come in and don't come in like that. Day traders don't succeed because they did trade date. Well, not really. So like, you're opening up a whole can of worms with that statement, right? So yeah, so then you don't trade daily or you swing trade, right? You're probably, the longer your time frame is, the more likely you are to make money. But that doesn't mean you're just in the market more. That doesn't mean that you're doing as well as if you just put your money in the S&P 500, right? Or in which, and what I'm saying is there's a certain point at which you're taking enough time risk that why aren't you just all in, buy and hold, right? So what I'm really saying is there's a lot of swing traders out there that think that they're gods and they're actually not performing very well. I'm super sad about all of that. Could have gotten my price, but this has nothing to do with the trading daily. I really wanted to take these trades. I felt that I had information that strongly would predict order flow. Right? Has nothing to do with any of that stuff. One could say I could have taken less risk on them, but they were situations where I felt it was appropriate to take on the risk. So I took the decisions, I traded it the way that it was supposed to, and it didn't work out. It was wrong. I don't understand this market as well enough. I don't have the edge. That's all there is to it. See, like now that I get out, it starts coming back down. Shit. This is getting back into like, it's really hard to not feel like the market is specifically trying to fuck with me. Because as soon as I get out, it flips. But if it's in a situation where it can do that, that's not necessarily when I want to be in a trade, right? So like based on what it's doing, I'm really tempted to just come in and take it short again, but I don't think that would be appropriate given what we've just experienced. Because again, even though it turned there, just because it turned doesn't mean that it's going to continue. Shit. It did come back through there though. I don't know, man. Maybe I just had really, really bad luck, but the impulse and volume was more than I could justify with what I was expecting to see happen. So if it turns around and turns out, there's just, I guess it just means that there was no way I could handle that one. I don't know. That the way that it came back down there so quickly, really strongly, you know, makes me awfully suspicious. Let's put it that way.
there was some strong takes on it as well. 20 contracts sold there. That's kind of odd. It seems like well, let's see here. Yeah, it seems like the S&P 500 turned down, and a little bit after that the treasury turned down, and then the dollar went up. I don't think it's flipping enough to do what you want. Yeah. You think there was a news leak of some sort? I did just hear something on my news squawk about interest rates higher for longer. There is some news at the top of the hour. Business inventories. That's usually not a huge one though. Nah. So I just taken a position there, and like it once again, it almost immediately flipped on me. So like my entry on that one was terrible. Yeah, and then right when I expect there to be like some flows continuing through and everything, it goes quiet. Well, that helps a little bit. Still pretty tame though. So, looking at the chart, this area between like 07 and 05 has been like the most heavily traded area. So, I think I've got to be a little bit skeptical of it just sweeping through there, you know? There's probably going to be a decent amount of liquidity in there. Am I making a fallacy by saying because there's been so much trade there, the liquidity should be good? No, I think in this situation, it applies because it has been range bound. Doesn't mean that they can't go through it. It's just it's going to take some volume. What do you mean you went shy all of a sudden? Oh, the camera turning off? The camera's still cooling off. Because I have the camera on 4K, it's getting too hot and shutting off. Oh yeah, these cameras get hot. Doing 4K gets hot. So the more video focused ones will have like a fan built into it. Probably switch in the future, but US NAHB housing market index 42 versus an expected 37. That's not positive for interest rates. Somebody just hit the micros really hard. The S&P 500 is doing all sorts of crazy now. Ugh. It kind of looks to me like the dollar is going to continue moving up. Weird. Something's up. I'm very upset with myself. Should be upset with myself? No, it's not necessarily myself, but like, this just like really didn't work out today, did it? It's a tough hit. It's a tough hit in an area where I really thought I was going to be doing well. But like, look at it. I've hit it wrong like every step of the way today. Oh, I tried. When I got out and it started zooming back down, I tried flipping again, and I very quickly did not like the trade and failed. So isn't it just kind of a little bit typical that when I tried taking 2 contracts with it that I started doing terribly? But I really can't explain this action. But I got out there because I started to see some liquidity coming in there on bids. I bring this camera back now. But yeah, I wanted to see like 3.85. I don't know, a lot higher than where it is now. I just Now I think that I can't trade it. That I'm tilted. Because some of the things that I'm seeing on the long side here have me like really weirded out. Like, I don't know what's going on here. Like when I look at the volume on the 5-year, it's all sell. When I look at the volume on the 10-year, I mean, we've had ups and downs, but overall it's sell. The only one that I see that's buy is the 30-year, and that's the one that's like the lowest. So like somebody has been trading like very much against what it's been wanting to do this whole time. And you would see that and be like, okay, well, it must be because of some sort of a correlation. But the dollars are at their highs. So how do you explain that? 6J is at its lows. It's not like the S&P 500 is selling off hard, that there's like some flight to safety going on here or anything. So I almost every theory that I can come up with to try and explain why it's doing what it's doing, you know, immediately runs into problems. Right? This is just really bizarre. That's where I'm like, it's kind of really hard to not feel like that the market is specifically trading against me. Right? It has nothing to do with it being fair, right? It has to do with why did it move in here? What could we have known that might have been able to give us the edge in this instance, right? No offense, guys. No offense, guys, but I feel like I'm getting a lot of projection here, right? What I care about is being able to accurately predict flows, right? So if I get something where the flows are completely the opposite of everything that I'm expecting, or the flows are all exactly, in this case, the flows are all kind of what I think, and it just and the price just doesn't move the way that it should, right? We need to understand that. That's a situation that we need to understand, okay? Doesn't have anything to do with life's not fair or you're traded too much or anything. It's all just down to this one thing, which is what gives you the edge in this situation? What's the piece of information that we're missing? Right? It's again, when we fail, what we want to do is we want to blame it on like psychology and all of these other things, right? Well, that second trade might have been, the failing might have been a psychology thing. They're really frustrating when you come in and you look at it and it's like, oh, if I had just done the exact opposite thing, I'd be making so much money right now. But what could I have possibly have known that would have told me I should do the exact opposite thing? John Grady, yesterday was the best kind of action. This morning is one of the worst kinds of action. It's really weird. So like, again, as we were talking about earlier, I think you could come in and say that the market expectation was actually that retail sales would be really good. And so it didn't really have as much of an impact on rates, or like, I guess you could say it was, quote, priced in, you know, sort of a thing. But that still doesn't explain all of the weirdness I'm seeing in the order flow. Yeah, but sometimes you just can't understand. Well, so I think that I wouldn't say that that's accurate. sometimes you just can't predict it because you don't know the information that you need at the time that you need it. But you can most of the time, you can after the fact understand it. Most of the time. And I'm going to sit here and keep watching it and see how this turns out until I think I have a good idea of what's going on. One of the things I'm like seeing when I look at my charts and everything that bothers me the most is that the Japanese yen is down. Like the Japanese yen is close to its lows. How is that going on? Why do we fail? But does the 10-year yield lead the prices in the yen or vice versa? I don't know if I could say one leads the other. To find one market consistently leading the other market is like really rare, right? Just because any kind of inefficiency like that's going to get taken out of the market. So I've found that they tend to move together. Yeah, it's only for abnormalities. But I guess what I'm saying is there is an explanation. See, what a lot of people will go into is they can't explain it. And so then they just think, oh, it's all noise and I just need to trade technical analysis stuff. Right? That's the conclusion that people come to. No, it can be understood. It's usually really complex. Right? But I don't know. Let's try coming up with more theories here, right? So the one theory was it's profit taking off of the trade. Another theory is that they are just in market making mode and that the market makers in the treasury are really screwing us up. Could also be that somebody just really needed to buy stuff today. I don't know. When it hit those highs like that first time, yeah, this is, you know what? It kind of was exactly what I said, right? Like, okay, what I'm concerned is we get the pullback, but then I don't get paid too much on the pullback. So we did get the pullback. I could have taken the profits. I could have only have taken $20 in profits, right? So I lost double what I put in, and then I took a second one. That's pretty shitty, right? But it was exactly what I was worried about. It's like it pulls back and it doesn't give you anything. And when I see that sort of a thing happen, that usually is like market makers in charge, and you don't really have the flows to have what you think is going to happen. Like contracting volatility, sort of a thing, right? The other thing that I find weird about it is that like we're at prices where where there really is like a strong risk of them like punching down into new lows of the year and that sort of a thing. No, I don't think it was correlation. So look at the correlations again. So the correlation that we have been getting has been with the dollar. So as the dollar has been going up, treasuries are going down. Because basically the market doesn't like the higher interest rates, so they expect the S&P 500 to fall, but you can't put it into bonds because interest rates are rising right now too. So what do? You put it into the dollar. So you see the dollar higher, treasuries lower. That was kind of what we were seeing yesterday, but it just like didn't quite come out the way that we wanted it to. But today, like, look, the dollar is higher. The treasuries are actually higher too. Six, normally the correlation is the Japanese yen is down, the treasuries are down. Again, it's the opposite. I mean, that probably has more to do with the dollar, but again, that normal correlation, not in line at all. Okay. But that's where it gets really weird, is that like, okay, so then that just means that they're buying the treasury, right? But they're not. They're not buying the treasuries. The volume is to the downside in all of them except for ZB. And ZB is like the lower of them. What's with that? So I can't explain it with the volume. I can't explain it with the correlations. I can't explain it with the news. How is it doing this? Really bizarre. I'm actually starting to see the treasuries sell quite hard now. Maybe. But that's where I'm saying that, like, it's hard to feel like that the market is not just trying to target me specifically. And maybe it's not like trying to target me specifically, but maybe it is playing a game with the shorts, you know? I think there was no MBOs in ZN allowing for other market participants to push the strip around. That one's kind of hard to sort out because it must be the case that the offers did not hold as much, right? I didn't really see that happening, but it must be the case for it to have moved the way that it did, right? I mean, that's the only option if we moved up and all of the volume was largely sell volume. It means that the buyer is just passively bidding it and the offers are pulling out. I did see there was a time where it looked like that, you know, the liquidity was increasing and that maybe there was a big player in the market, but that kind of fizzled out. This was like these orders at 0908 half, but there was a little bit more than that. Could it be explained by volatility? Well, so I think that volatility is a likely suspect. And it could just be reverting from gamma with like the like volatility decreasing. So let's come over here because I'm gonna bet that volatility is considerably lower today than it was previously. So we could maybe explain it with the options. We could maybe explain it with, well, and sorry, is it next week that we get? Oh no, yeah, it's this Friday. So it has to be the options then, doesn't it? It's gotta be. It's It's got to be like options are taking profits and reducing their positions, and you know, it's mean reverting so that the market makers maximize their profits on Friday. And then you get options, and then you get the futures rollover. So maybe the increase in interest rates they were looking for, where they go up to 4%, happens in March. Really mad because my trading looked so good before all of that, but I'm still in this place where it's like 1 or 2 bad days can wipe everything else out. So I guess that means that I'm taking too much risk. No, I see Octavius's thing here where there's not any major MBOs out there. I wonder if my read on the absorption is off, because there must have been some significant absorption on the bid throughout all of this, right? And I never noticed that. Took the right risk at the wrong time. No, well, yes and no. I mean, I've had trades that were $50, $100 on the long side as well, right? So it's not like I was taking like unusual risk and stuff like that. So much as it is, I think the amount of risk that I'm taking on compared to what my average trade is might be too much, right? Because then it comes down to when I'm doing it like that, all of those small ones end up not mattering. All that matters is the big ones, right? And that means, you know, in order to avoid that, that means that I have to hold tighter stops on those big trades. That basically $50 is too much. It's either that or I need to just start hitting into it with double lots all the time. I don't know. Man, S&P 500 looks like a mess this morning. Like on a 5-minute chart, that it looks like a nightmare. I don't know. I guess the other thing here though is like, so maybe we can explain the result of this from the options. But I'm just so surprised that we didn't get more sell orders in the treasuries on higher interest rates.
guess the retail sales just not enough. But even if I go to the inflation data, I feel like that interest rates should have risen higher from that. And even if I go back to like the jobs, you know, well, I don't know. I mean, that it rose really high since that, but like, come on. Shouldn't we be going back to 4%? So, if that is the prevailing market dynamic, though, I should just stay out of it, right? I should just stay out of it until next week, if not next month. Yeah, next week, probably. Well, I don't know about probably. You often get some kind of weird stuff happen off of the expiration, but I don't know if that's going to be as strong of a factor this time. I don't know if that's going to be as strong of a factor this time. And you still get this kind of bizarre stuff. You'll get kind of that difficult stuff in that whole week before the futures roll. So that's why I'm saying it might be better to wait until March. The camera is out of focus. What is that? No. You just might need to adjust your YouTube quality. You have any roll? Yeah, avoid it. I've never done well around the roll. In fact, I'd say it's really common for me to have like a bunch of bad days in a row and then be like, okay, I'm not going to touch it. And then there's the roll and avoid it, you know? That's a lot. I have to say though, what has happened, I don't think we're the only ones that are surprised. Because, you know, like the flow analysts and the options positioning guys, they weren't warning about any such thing, you know. It would have to have been like the guys at Citadel were kind of planning on doing this the whole time and everybody got fooled. That's what I feel like is happening. It is turning down. It makes me want to take it again. Depends on the flow. Well, that's more like end of month, right? So you've got like the amount that has to flow into bonds versus equities based on rebalancing of equity parity portfolios. But then you've also got the people that are rolling or taking profits in the futures. So some of it is people hedging themselves against interest rate changes, like they're holding the ES futures and they're holding these treasury futures to hedge them against the interest rates. Some of it is people trading the basis.
Don't be greedy. Don't find the trend. Yeah. I mean, the big thing with the roll is just you got to realize that the market orders are not as influential in those times, right? So you know what kind of sucks about this, by the way, is that if I had just held my original trade, I'd be scratching it right now. I still really want to buy the rates. Like, now the thought that's going through my head is rates are going to increase and it is going to go to 4% and I'm going to miss it. Well, there's the oil numbers. The problem with this area is that this is where there's been some liquidity, so do you really want to be hitting into the liquidity right here? I'm tempted. Kind of tested the market there a little bit. When I pulled my order, it ticked down. I am starting to see more selling coming into the 30-year now. Still steepening. I guess another thing is you might be able to explain this movement through steepening. Although you'd have to say that it was passive buying in the 5-year. So something like that, I'm sorry, it is reacting to me. Like the micro is 100% reacting to that order. Like I put one on, like all of a sudden there's like 6, and not that time. Let's see here. Tom Gloza being retweeted by Carl Quintilla. A weekly crude build of 13.6 million barrels per day means we have added 50.75 million barrels of crude to commercial stocks so far this year. Data that is certain to spank the speculators in short order. And we did see a pretty dramatic decline in oil there. Crude build, though, is not necessarily indicative of higher rates, right? Whoa, what's with this big bid at 7.5 now? Yep, it's doing that thing again. Okay. Well, I don't know why I took that, but that's the best entry I've had so far. I guess ultimately I just really strongly believe that interest rates should be going higher. They did plow through some of the volume on the downside there. There's still some big bids below them, though. Not a lot of orders hitting into that 05 half. Here's maybe the ZB gonna break lows. Okay, so there they took 05 half. Those orders didn't pull, but they traded through them all. Okay, well, at least I'm not the only one really frustrated, right? That makes me feel... Thank you, Kevin. Makes me feel a lot better. Makes me feel a lot better. There's some absorption there in the 10-year, though. Look at that. There's selling coming in to this treasury market pretty hard now. But somebody's absorbing it at 06. Is there a calendar that is best? No. I mean, so this is a really complicated topic. I feel like that I am under I don't know enough about it, to be honest with you. Like how do you roll tactically? What are some things that help you roll tactically? But one thing is, like, are there significant news events around the time that the roll is happening? And in this particular case, it looks like there won't be. So you might see the roll start earlier than normal. And just remember that it's 3 business days before the end of the month. So it's going to be like you want to start trading the new contract on next Thursday. Send me a picture. Okay. What am I supposed to be seeing on this picture? Target was above the blue line, news high pre-market. Oh, right. No. Maybe you should be trading oil right now, Kevin. That was... Wait, what's that? What was that? What instrument is that? Oh, if I open it up bigger, I can see your trades. But I can't tell what instrument. It looks like it's MES. Yeah, that's MES. Yeah, I can see the arrows now. Oh, yeah, that's frustrating. I mean, you scratched it twice, basically. I mean, you took a little bit of profit out of them, right? Or were those losses? I don't know. Man, if you're trading the S&P 500 today, you've got to be frustrated, right? Because the S&P 500 has been chop city. I mean, what's been happening here in the treasuries is pretty typical for treasuries, and in reality, it hasn't been too bad. Like in terms of like what you can make, it's just that it's like it's not doing what it normally would, right? But the S&P 500 is just chop, 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 chop. Yeah, it sucks. Well, the 30-year did make a new high, but it was only 32 contracts at 18. J. Dutt named city's head of markets for CEEMEA. What is that? I don't know that. So John Grady is saying market, this is the type of day to shut down the platform now, win or lose. Otherwise, a prairie dog hole can become a bottomless pit. Speaking from experience, market makers have complete control. That certainly seems like the case in the S&P 500. I'm not convinced that's the case in the Treasury. The Treasury, it looks like something's starting to develop. So the big change that I'm seeing in this one is that there's a little bit of flattening on this one, and the 30-year is reaching lows. So we may actually get a run here in the Treasury. I mean, the fundamental story makes sense. Of course, it happening like 2 hours later, that doesn't make much sense, but this is what it is. So I'm not seeing as much liquidity bid up there at 05, but I would still expect that they would need a strong take to get it through there. Then once we get through there, then we could probably start moving more normally. Okay, there's some more volume at 18 in ZB, so that's good. Yeah, you're not getting a strong offer right there. Maybe you should have just scalped. That was up 4 to 5 points on all 3 trades. Like, well, I don't know, man. Was anybody here expecting today to be a range-bound market maker dominated market? That's certainly not what I was expecting. Well, now that I'm seeing a little bit of an upside, but I'm seeing some iceberging on the upside too, so it looks like we're stuck in a liquidity hole at L5 half. I expected it to be an inside day, but not like this, really. So when I saw that retail sales number, I'm like, this is bad. Market's gonna move. And when I hit it, I had 2 good hits. Should have taken the profits on the first contract faster. That would have made things a lot easier, but Kind of seeing the Japanese yen looks a little sad here too, so maybe the yen helps. Now it's steepening back out there again. The 5-year steepened back out. Okay, 10-year was a little hesitant to take that down tick at 0.5 half, so you've still got like a liquidity problem here. I mean, that's a better offer at 0.5 half. Oh, 0.5 pulled. There you go. There you go. I'm hearing clicks. Hearing clicks. Spoo's turned down really hard there. There's a couple of asks chasing it, I think. Okay, now I'm seeing some volume trade there in the 5-year at 12, at quarter, 12 half. Yeah, Zen is still being a little hesitant there. Maybe just because the 10-year already kind of really sold it? Or maybe it's the market maker doesn't like his positioning and is kind of sandbagging. I don't know. But the 30-year has made some pretty good progress there now. Well, I thought it would get a little bit easier at 0.4 half, but it looks like it's still kind of... There's still liquidity to work through. I'm a little surprised the market makers are holding as hard as they are here. Because the volume in the 10-year really turned down. The volume in the 30-year really turned down. It hasn't quite come through in the 5-year, but I'm starting to see it in the 5-year. Like, this is what I was expecting this whole fucking time. And it's been a pretty dramatic, almost 25,000 contracts short now. I wouldn't call it a train, but pretty strong down move. Let's clear our numbers to the downside here. Wow, it's really already 8:48. It's really frustrating. It's been doing this all week where it's like it's just getting interesting and then it's time for us to go. You know what I mean? I'm sorry, guys. I'm always surprised when the ES respects an oh right, like how it went 3 times to the over news high and then from the pre-market. Yeah. Oh, for sure. Yeah, because the stats are that they beat out the overnight highs or lows almost always, right? Yeah. Well, not almost always. It's like 70% chance, yeah. So when you come up to an overnight high and it respects it, it is weird, for sure. Like I really have to say that the movement in the I'm not going to say that the movement in the S&P 500 is like weird or bizarre or hard to explain. It's not like that. It does this all the time in the S&P 500. But I would just say that it is a very extreme range bound market for ES. ES likes to trend. And when it chops hard. And it's chopping so hard today in the S&P 500. So this has been a pretty good downside. I don't know if the 10-year is going to make it to new lows or not, but the ZB definitely took new lows. So I think that my conclusion off of all of this is that I did have it right, and that the reason it was defying us was because somebody was putting on a steepener. They were passively buying the 5-year and pushing it up, and then they went hard on the ZB all at once, pushing everybody down. That's what it looks like. I don't think I've ever seen it play out like that before, but that's an interesting one. The thing that I'm thinking about now is yesterday there was pretty steep pullbacks. Are we going to see that again today? So I think since they fell through like that 06 area, market makers probably not happy about that. SEC votes to shorten trading settlement to 1 business day? For real? Wait, is that for real? I can't think of any knock-on effects for markets from this, but it will make some of the mechanics of stock market settlement simpler. In Australia, the ASX spent a few years trying to use blockchain for quicker stock settlement, but abandoned the project late last year. Well, I'll tell you what it means. It means that like if I'm a hedge fund and I come in and I take a big trade or something like that, well, I guess it probably wouldn't apply for a hedge fund, would it? I don't know. If I'm a retail trader and I come in and I take a big trade and I make money off of it, and then I want to take an even bigger trade tomorrow, I can't. I have to wait for it to settle, right? So if it only takes 1 day to settle, that could increase volatility, actually, right? Oh, I missed a comment from Joseph Wing. Consumers have a ton of money to spend. It's not just the rising wages or pandemic savings, but there was a tremendous amount of credit created last year and ongoing that injects money into the system and is being felt. Yep. Okay, so I just want to note we had a liquidity hole around 05.5, 06. We breached out of the bottom of that. We got pretty decently strong flows to the downside, especially in the 10-year. We are pulling back. I sure hope that we don't get stuck in that 05.5 area again, but let's see. If that happened, it would mean it was really short-lived, right? And where are we at on time? Got a few minutes. You guys aren't saying much though, so I might just shut it down early here. Today's title, Chop City despite strong retail sales. Over half is able to bid. There is icebergs here though. It's doing the thing. Doing the thing that kind of suggests that they might get stuck here. Like if we are gonna see continued downside, it's gonna have to be a train. It's gonna have to be one of those ones where they absorb against it all the way and it just keeps pushing and pushing and pushing. But I think that's it for me today, guys. Well, it wasn't as bad as I initially thought, but I'm still really upset about those first trades. So I will see you guys tomorrow. In the meantime, stay excellent, team.